Hello guys, glad to have you on board again. Today we're starting right away with the Bitcoin as usual. Yesterday it managed to close at the lows but still didn't break any support or resistance, so we're just expanding volatility the way it was expected. It's just not the exact side we were wanting this to be, so it's just I expected the first outburst in volatility, so volatility coming back in the market. I was expecting this to be to the bull side, but apparently the market chose to do it the opposite side, so it's just that triangle we had back there just decided to trigger by the downside first, but this is still not a big deal. We expect the market to just release out of that triangle to both sides. So remember, what we're expecting in here is nothing close to a trend to create out of this compression, because we're terminating a long-term bearish trend. So what we expect in here is a long-term market reversal that will take a specific pattern to do this, which is, and we've been talking about that, so I'm just rephrasing out here to make sure you really got the point. We've got multiple ways of reversing a market, and the other day we've been talking about the diamond structure, in which we first create volatility, which means we terminate the trend in volatile endings, and then we've got contraction, and after the contraction, meaning that this is how generally, okay, compression, expansion, okay, and then compression again. And this is generally how you do create the diamond reversal, okay? Diamond reversal is we go there, we still have a volatile market, creating higher highs and lower lows, and then we make lower highs and higher lows, and then we get the market reversal in the end. That's a step-by-step reversing, that comes from volatile outburst to compression, and then market is finally accepting the reversal when we break out of the compression. We've got the exact opposite in here. First we've got the compression, and then we've got the expansion, and obviously at the end we will accept the bullish reversal. But this is just many ways to get to the same option, reversing a market that has been consolidating and crashing. So this is a crashing market kind of reversal. So obviously I expect this market to terminate bullish in the end. We've got many ways to get there, and I speculate on this one to be the right one. That's a speculation. This is why the ratio in here in the confidence index remains 2-on-5, which means I'm not that confident. I don't put that much amount of money in here, and I'm ready to let the market prove me wrong. So this is why this is buy and hold in here. I have absolutely no certainty that market has been reversing yet, so there is multiple options, and facing that uncertainty you need to have a low confidence index, which means low exposition to that market. You need to let some freedom for the price to evolve the way they want until you manage to let them prove you right, okay? It's just we don't know. Once again, think about the Schrodinger's cat box. We're really into the same thing when you do trade. You don't know what's going to happen. You have absolutely no clue about that. You're just trying to figure it out. And the way you'll do it is like not knowing how the cat is both alive and dead as long as you haven't opened the box. And you're not opening the box until the price has reached invalidation level or validation level. Validation level to me is breaking 7,400, okay? So until we go there, I don't give a shit. Invalidation level is fucking 0 in 1 year from now. So if 1 year ahead we're valuing probably 0 or still standing at 3K or below, I consider that trade invalidating or invalidated, and at that point I would just get the cash at the table. But right now, as long as we remain between those two boundaries, all that happens in between is none of my concern. So I'm not fearing anything that's been happening yesterday, nor I do today. It's just waiting and let the market do its shit. I expect the market to return and recover some volatility after that compression phase. So yes, we've been starting to the downside as I was forecasting us to start with the bullish side. I mean, fuck it, does that really make a big of a change? I don't think it is. So just let it go and expect the market to both break supports and resistance at that stage. It's just the way I think it will be. If we do trigger another bearish trend, something that will last a couple months to the bearish side, then let it be that way. I don't really care. It's just if this is what's about to come, then we'll probably have to see the 4Ks, and that's great to me. I remind you once again, I want to put 10Ks into cryptocurrencies, which is not that much regarding my entire assets. And for now, I've just been setting 5Ks in, which means I left 5K, 50% off, really available for cashing in additional reinforcement at better prices. So if we're trending downward to 3K, 4K, I'll obviously double down and put the additional 5K. But I'm not changing anything about those I've been putting in here. I'll keep these ones no matter how, no matter what, until we reach potential invalidation, and you know the rules, and we're pretty far from doing it. So we're going to talk about the Ripple. It's been trying to rebound because remember I said you don't trade this despite putting a black box in here, and as long as you don't make a candle close outside the box, there's nothing to worry about and there's nothing to trade. We've been outbursting to the downside, closing at the low, but right in the support area. So we're right into the blue area. We're working that area, and I expect the market to rebound. So many reasons suggesting the crypto market isn't over yet. It's just fucking volatile, and it's choosing bearish volatility first. So that's a choice. I see no reason, so there is no market catalyst to push us to the downside. It's just the market made a choice because of available liquidity, probably. Must have been too many buyers on that support, speculative buyers, so the market decided to flush them out first by going to the downside, but we're probably going to have lots of sellers right now, and the market will just go up to fuck them up as well. So don't speculate on that market. I've been clear on this. If you do try to speculate Bitcoin right now, you're just in the worst case scenario because volatility will be there, and that's the worst possibility for speculators. We're just going to go up and down without reason, flushing those who FOMO on one side and then flushing them on the opposite side afterwards. So FOMO trading, absolutely not possible. Ethereum is just basically trading in between. Same thing goes here. I haven't broke the support, I haven't broke the resistance, so we're really ranging out there and nothing is close to interesting pricing. So you just let it go until you got something that we care about. That is either a bullish breakout or a bearish breakdown out of that range area. So far, nothing of those two has been happening. All we can just remark today is that we're now switching sine wave to bearish. Okay, yesterday's been closing bearish. In terms of sine wave, we've got nothing close to a confirmation out of momentum, which is really oscillating at that point, and we've got a bullish trade line supporting on the way. So it's kind of a not knowing where to do market, really confirming what I thought. We're in a range kind of market. And doesn't really look like a trend to me. So we'll see about that. There is still a possibility to make lower lows in here, and no problem with that. In that case, I will obviously release the speculative positions and just let go with them and take a tiny loss in here, and that's it. That's part of the game. But I'll still remain in with the buy and holds, no matter what, on that market. If we look at this on an index perspective, same thing goes there. Altcoin index have been pretty well making corrections in there. We'll remain into a potentially bullish cycle. This can just look like a pullback. And as we probably have broke that resistance, this is thanks to Ripple. Let's set things straight. But it still show us that in an index perspective, we've got a traction for those markets, for those big altcoins. Let's say the top 10 after Bitcoin. Even though I think right now at that stage we should be re-indexing those things regarding the new volumes in coins and circulations. So I may be asking EURUSD to eventually remaking that thing with new indexes. I'm gonna ask him. So yes, we're gonna update this thing. Might be changing a little bit the structure of that index, but anyway, for now, and I think until we've been proven wrong, we're just going sideways, and it just looks like a head and shoulder. So we could just find some buyers in here. We're buying. That will be a head and shoulder, and we're validating the thing. Will just show us a nice reversal heading straight to the previous resistance area. So I don't change anything. I just think the market is just trying to trigger some stupid bearish entries just to fuck them up and reverse afterwards. Now we're going to talk about other markets. So obviously the sellers are taking their profits on those markets, creating some rebalances. So there's not a lot to talk about. This was expected and nothing has changed so far. It's just in a daily perspective in the conventional market. We're digesting and ranging approximately near the 200-day moving averages, but I strongly expect the price to break them down. I don't think we're going to last there for a long time, just probably 1 week in that price area before breaking it down, maybe a couple weeks at best. But I don't see any reason for us to recover, so I don't see any reason for us to go there again. All I think is that the market here is trying to digest before breaking to new lows and trigger some second waves of crashing markets, especially in the Nasdaq. Not necessarily going to be the case in the SPX, and I stand on this. I think SPX is going to range that price area, make another bearish impulse, probably going to go there, and nothing and no lower than that. I think the SPX will just break those lows, but no more than that. I think SPX is going to find some buyers in those areas because lots of its components are going to be switching from, as I said, growth to value, and there are lots of value stocks into SPX. So obviously that switch will look like a range where other indices who has been piling growth values, growth stocks in them, will suffer from that rotation. It's just money is going to move, and it's going to move. So broad indices will have a range look like kind of consolidation ongoing for the next quarters. So I think SPX could just range in here for a few quarters before heading into big short kind of trading. But I don't necessarily think SPX is going to break the February's lows. Nothing close to this. Where I think Dow Jones has quite some chances to do it is double top structure. I hardly see the Dow Jones not going there. So we'll see. I don't necessarily think the Dow Jones is going to validate the double bottom. But it could very well do it. And if it validates the double top structure, then the nastier things are to come. But from the way I see this, I really see that market doing this, finding some strength in here, okay, consolidating a lot, probably retracing 50% in 2 waves, see, something like that, and then this is where we switch to bear market. But to me, really, just changing this, I think we're going to stop at 14.6% retracement, okay? So I think that support, we might just slip a little bit through it, but no more than that. And I think that what we're going to do instead is this. You take that trend channel, okay? So now you know we're searching for support. So what you do is that you take the latest to resistance, first the resistance area, support, resistance. So this is where you build your trend channel in here, okay, to the lows. And as you can see, we're looking at the area for a breakdown. I strongly think that we're going to retrace back to the latest support of that trend channel. Maybe, as I said, if the market is volatile, we can try to break through it. But just like we did back then, I think lower shadow candles will be there. No more than that, meaning that we won't find bears on the support. And I think right in here we could find some support and just then try to retrace back to that thing. So I think we can have some pretty deep retracement into the Dow Jones afterwards. But anyway, I think this may look like a crash, but not necessarily going to be a crash in here because the structure doesn't fit the plan. Okay, remember what this is. If you want to trade this, we clearly have the parabolic thing. Okay, it clearly is the case. But generally, when you have the parabolic thing, you want to see parabolic, the volatility, and then new parabolic move. So it's getting parabolic, but this one doesn't seem mature enough to consider this as a crash. So the ending might be just that double top structure. We double top, and then we make a correction, standard correction like the SPX will do. Nasdaq seems pretty well different, because in here you can clearly see the parabolic, the volatility and the final outburst. So in here, clearly we have a structure for a market ready to crash and to trigger the crashing pattern. But remember, crashing to me doesn't necessarily mean the crash standard of the world. The crash standard meaning, the standard meaning of crashing, the way you're going to hear it here and there on market commentaries and analysts and things like that. Most of the market will crash in a way that a crash occurs when we get to retrace more than 30% of valuations. I think we're going to do this broadly based. All the indices will suffer from this. The thing is that, to me, they will trigger different kind of patterns. The Nasdaq will trigger the crashing pattern you know about. I think the Dow Jones will probably trigger the double top structure to reverse that market. And I think the SPX will trigger a standard correction. Okay, wave 4, tiny wave 5, and the market will just retrace into bearish impulses. Okay, so we're going to build 5-wave structures 2 times to the downside, I think, in the SPX, just like we done back then. 5-wave structure, consolidation, 5-wave structure, termination. Okay, I strongly think that this is what it's going to look like. Obviously, there will be a violent psychological part in the second wave, but I see the market correcting this way in a technical perspective, in which I think Nasdaq is just gonna fucking fall apart, because this one looks like a fucking bubble, and we've got everything we need to just trade that as a crashing market, and the structure is different. Okay. So this is what I just wanted to say regarding this thing, and just remind you what you should already know at that point. So now, setting things aside. Sorry about our little interruptions. So moving on from this, VIX scenario is probably trying to figure out where we're going to settle. We've got multiple options. I think we can clearly set 3 different areas. So we got the low risk area, in which we're probably never going to go retrace to. So probably not going to get below 15 again at that stage. But the question is, either we're going to set ourselves between 20 and 30 and stay there, which means high risk scenarios, and the volatility remains here, the risks remain the major topic. Second option, we try to narrow the risk factor and try to set ourselves between 20 and 15, and it's going to give us many different options in terms of correction and ways to digest. But looking at a broad-based perspective, like I said, we're going to have a rotation. The thing is that if money is still pouring in the market, because we still have monetary favorable conditions, meaning some monetary injections here and there, QE, whatever thing this is, share buyback, if we still have a positive inflow, I think we could retrace back to that area, 15 to 20 in the VIX. This will probably look like an SPX that will retrace to that area. So probably deep retracement to expect on the SPX if that's what's about to come. So SPX could retrace quite a lot, probably above 2,800 and eventually going to $2,850. And that could be an interesting price. If we go there, obviously shorting the SPX again will be a good option, no questions asked. It will just that we might have dip retracement on that asset. Okay, probably searching the previous market top. It's going to be an interesting area to sell again on the SPX. Or at least try speculative entries. I remind you that I've been getting out of the SPX entirely, took the gain, nice gain as well in here. It's just that this one has too many options. So regarding and facing that too many option scenario, I rather like to take the profit as long as it's there, as I see way more bearishness possible in both the Dow Jones and the Nasdaq. Those two, I remain bearish on them, but I would just return to neutral in terms of SPX, okay? For the reason that I just explained to you. So we'll see how it goes. If volatility can pick up again and go to 30, we're probably going to have to break down and fill that area where we've got lots of stop loss to trigger. So I think the market has very well many options to go there. And I think probably tomorrow is going to be the price area in which we're going to go there. So we'll see about that. Okay, but I still think this is very much probable to try to recover today but fail and go right in here on Monday just to set things really straight. That will keep remaining being aggressively looking for supports in a weekly chart perspective. So we'll see how it goes. regarding this. And then what I wanted to say, okay, and profit taking has been made on the FTSE. So 23 profit taking. So you can expect some kind of 38% retracement out of the entire bearish impulse. So this is the way I've been doing things. So I don't know if others have been doing the same. But if we've done that, then probably you can expect some retracement to the breakout areas. So I think at least 23.6% retracement, probably retracing down up here. And then we'll find another bearish impulse. Okay, so I think probably retracing here, no more than that, and then some more bearishness to come, because bulls will have to, or the price will have to retrace out of bears taking profit. It's nothing close like a bullish entry, so you must remain bearish on this one. It's nothing like buying, it's just rebuying the selling entries partially. That will drive the price to range and digest that volume for a bit before the bears gets back in. I still think that thing is going to break down that support. It's just we're going to range in here because bears like me would like to secure the gains, lock the profits. Okay? What other things I've been doing recently? Yes, buying gold. Buying gold. Where it is? Buying gold. So buying gold upon support retracement this morning. Bought it right in here perfectly, so we'll see how it goes. I don't necessarily think the consolidation is mature enough. I clearly see 5-wave bearish impulse, so it really tends to look like this, so probably an ABC, okay, to be expected. I think we can pretty well retrace down to that support. It's still a little bit too early to know about that, but it really looks like an ABC. So you still have, if you haven't filled up with the gold, you should keep some money available for potentially better prices to retrace to, and we'll see. And here is where the price will be important. In terms of price structure, you can clearly see 1, 2, 3, 4, 5. So big wave 5 extended. So let the market retrace and digest for a long time. I see that just this retracement probably isn't enough yet for the gold to consider this as a viable termination of consolidation. So you can expect some more bearishness to come to retrace a little bit deeper. So don't rush into buying instantly. I think waiting is still an option. Silver remained bullish, of course. USO scenario has been terminated yesterday. We were trading this one on a breakout trade. It was like trading in here, breaking of that support. Sine wave detected the breakout action with a little delay. Should have detected right here. I don't know why the hell it's been so late to detect the breakout pattern, but anyway, sometimes the algorithms are just algorithms. They are not perfect, and they are not designed to be like that. So clearly, I think after that exit pattern, that breakout is just a range breakout. So you can really consider this one to be a support area in here. So don't expect the market to just flush. Wait for the market to build a range first, retrace, and then exit from that range to the bottom, not making higher high, and then we're going to have something to trade with some more convictions. But for now, I think this is done. I mean, the first breakout trade's been done. Profit taken yesterday, perfect profit taking, was trading in here as the price reached out there. So entry was there, stop was there. I took a 1-to-1 ratio. It gave me a 1.95% gain net on the account. So nice trade for a breakout, easily done, taken profit in a single day. I like those kind of trades. So it went easy, went perfect. We're gonna just let it go. Probably gonna have one final impulse wave 1, 2, 3, 4, 5 to expect to reach into lower prices, but I'm not gonna take this trade as this one will trigger right into the dump area. Normally, this trade is really for the dumps, so you can take this one. I think it's low risk, but I never do trade in the dump area, so you can expect some kind of wave 4 activity to be there to terminate wave 5, and those who want to buy can eventually consider buying in the blue area or below in the lower boundaries of the range, and then take a bullish trade trying to retrace 50%, so retrace down to the mid part of the range, or trying to target the upper boundaries of the down zone. Okay, so you can consider this as a trade action. Next time I want to be bearish is on the upper areas of the DOM area or in the red area to take a very nice risk reward ratio kind of trades. okay? So the way I've been building this is pretty easy, okay? I took the breakout entry. We can clearly see that this is where the market is breaking. I just built a range. Consider that being the middle part of that range. So breakout action detected here. I decided to set that at a 50% of that range. So you can say this way. This leaves us with an uninteresting price area, dumb area right in here. So all we care about is what happened at the boundaries of this thing. So you can obviously already set that as the untradeable price area, black box. Okay, what happens in there, you don't give a shit. All you want, is to buy blue area and below and try to sell red area and below. Forex market. Junk bond first. We need to have a look at junk bonds. So long-term perspective in here. We're going to look at daily, weekly chart. I'm going to set weekly to have a broader view. So as you can see, clearly that's weak and that's not good. We're trying to take profit, didn't work, and the bears are in control again. I strongly suggest that this market is about to make a breakdown, and it's not going to be pretty. That will trigger probably this market to explode, but still, there's a matter of timing. So the third contact on that support, at least fourth time to be precise. So 1, 2, 3, 4 time on that same support. We'll see if the market managed to rebound. See very low probability for this to happen. A lot more probability to trigger just the giant bonds to collapse. And when they do collapse, this is what it looks like in 2008. So you can expect them to go fucking bearish. But it's still a little bit dangerous for now to just forecast this. So I think we're just going to range in here for a bit before triggering it. So we're weekly. So I expect probably 1-2 weeks of range before finally breaking it down. And this is where the nasty part will show up. Everything suggests we are going to be that way. Bearish trend line, bearish moving averages, bearish volatility, everything suggests some bearishness. The bulls try to play their game, try to hold those prices, but they're failing it, which means credit bubble is about to trigger. It's just a matter of time, matter of weeks, until we remain failing below those resistances like we've done. We can clearly set that there is a price channel, and this will look like a wave 3, okay? In that perspective, this is wave 1, 2, 3, 4, 5, consolidation probably done, or flat consolidation. You can expect the market to break down that trend line. Anyway, we're going to set ourselves in the down 50%, the lower 50%. So any moment we go there, it's going to be instantly going there, working a bit the boundaries and accelerating. Okay, so in terms of price action, what we can expect is sideways action in here, bearishness, sideways action, more bearishness. Okay, so you can expect this. It's going to take quite some time. It doesn't say it's going to be instant. If you have a look at what the timing could look like in a weekly chart perspective, says 2018 already. So you don't have to press the button instantly and say the market will collapse. It will take time. It will digest. But you can see the risk structure has been piling up to show some risk ahead. So those who are trading bullish on the stock market are really nonsense and stupid. Otherwise, you just want to wait for that market to terminate that bearish impulse and consider this as a consolidation. We need to break that up. As long as the market doesn't break up, the junk bonds means lots of problems ahead for reasons that are really simple. It's like I've been doing and taking that example for the French users, and I'm going to reuse it for you because I think it really is the best way to explain the view I have on that market. Just take the example of global warming and pollution and everything. We know it's there. We obviously know. I mean, how dumb can you be to just forecast this is not true? So it obviously is there. It's like the pricings in Wall Street. We know the pricings are really fucking high. And at that problem, we know that this is rising at a dangerous pace, just like temperatures and global warming. We know the end is not going to be pretty. Same thing goes there. But some people choose to fight it, which is dangerous. You don't fight the market. You can fight or be active in the way you do think about global warming, but you don't fight the market, okay? You can fight global warming You can protest, you can have beliefs. I truly invite you to do this. This is actually necessary as a human being. We're all living in that fucking Earth planet, and we don't want to fuck it up. So the problem is, when it goes to climate change, and all the shit we are doing to Earth, the problem is that we're living on Earth. Do we really need the market? No, I don't think so. The markets are necessary at some point, but markets were existing long ago before the stock market. So the stock market will probably survive anyway, or change its structure in the future, because it's been doing so much bullshit. The problem is, Earth will probably change as well and adapt to what the shit we've been making on it. But the problem is, will we survive? We can definitely survive without a stock market, but we cannot survive without Earth. I mean, if Earth decides that to adjust, it just has to flush us out. I mean, if we can't breathe air, we're just gonna die. If we can't drink water, we're just gonna die as well. If we can't trade stock, we can still fucking drink and eat. So fuck it, we don't need the stock market, but we obviously need the Earth to play and live and whatever we're doing. So the difference is here, definitely. But really get yourself in that mindset. You're not going to force the market. You're never ever going to do that, because smart money is a lot more influent than you will ever be. So in a market trading perspective, you're just going to use the same pattern, which is parabolic risk taking, and some people will have different reactions to that. So just take the climate changing kind of behavior. You have on one side, on one extreme, guys like Donald Trump. There is no warnings, okay? Those who are saying we've got global warming are there to bullshit us. We need, and the most important here is to maintain growth and to keep on the way it is, because no matter what, things will adapt and things will do great. We're taking parabolic risks in here, but who gives a shit? I mean, it's really the same thing as it's been doing in Wall Street. We know the prices are very high. We know ugly things are ahead, but fuck it. We're just going to keep on doing it as long as we can. So, those guys, stupid. But in the market, they will be right first. Then you will be right. And if you try to fight them too early, you're just going to be wrong. So, it's like any crashing pattern. When things goes parabolic, first the guys try to deny. Okay? It's obvious, it's stupid, and guys will try to deny, try to fight it. This is what we've already had. I mean, the pricings are really expensive for years from now. I think it's been starting earlier that year, or later 2017. So it's 1 year from now that we've been starting to do stupid decisions every time we had to make one, because the smart money chose to deny and to say, okay, we've got no problems. We're going to keep on going as long as we can. So risk is increasing, and then reward has to increase as well. That pushes us to even more parabolic schemes, but all parabolic schemes terminates the same. It collapses on itself. And that's how it goes. That's how it will be for the stock market as well, because we created nasty bubbles. But bubbles will implode, not necessarily every market. Like the S&P 500, which is a broad-based index, it's not necessarily going to crash or trigger. It's going to crash in a general standard way of seeing that word, because we call it a crashing market, a market that is entering bearish market territory, which is minus 20, minus 30%, and you go if you go lower than minus 30, then generally this is what we call a crashing market. So this is the conventional way of crashing a market. I do talk about my crashing pattern. My crashing pattern is probably not going to trigger on the SPX. It will obviously trigger on the NASDAQ because too many of its components are bubbles. So the NASDAQ itself is a big bubble and will burst because of its components. Not necessarily will be the case for the SPX. All right? So see that way. And take the climate change as an example. We're still into denial phase, and right now we're facing the problems, okay? So it means markets are going down. They're going brutal down. So it's not tiny signs. It's like a big fucking storm has been hitting the biggest economy on Earth. Just imagine that we're denying climate change, and now a world-class tornado has just broke through the entire US soil, and it's been fucking up everything. We've lost billions, but yet everybody thinks it's still gonna rise. I mean, fuck it, like every fucking bubble, we're starting to crash. We know the ugliest part is ahead, and I think it is, and I trade according to this, but yet what you can see right now is what? Just look at and open your TV channels, look at Bloomberg, look at whatever shit this is, they're all saying the same thing. That this is a buy the dip situation, no matter what, we're just gonna keep on rising forever and shit. No, this is the red warning sign that is in here, showing that the worst is probably ahead. The worst in terms of stock market, meaning your lives doesn't have to collapse. The stock market will probably enter bear market territory in the next few years. You just need to adapt to this and survive, which means you don't want to be fully invested in stocks because they're going to lose a lot of their value, meaning the company will not die. Those stocks will still worth something, but they will just be buyable at much more affordable prices. And if your goal is to buy stocks and make money, as you and I are here to do this, we're not here to change the market, we're not here to lose money, we're just here to take a tiny bit of money out of market to just live a decent life. So the way we do it, don't fight, just follow and assess that the guys who were trading that market were in total denial of the risk they were taking. Now they're starting to figure it out, and we're gonna profit from this. So only the smart ones will profit from the crashing era, because most of the people will just think we keep on going the same way forever. So obviously they'll say this is a buy the dip situation, that we're just targeting retracement, Fibonacci retracement. Then I'm probably going to reach out to the historical highs in a few quarters from now. Fuck it. They're wrong. They've been denying for months, and now they are going to start to be proven wrong. And the more we will prove them wrong, the more they'll say, no way, this isn't normal, we shouldn't rise, we should rise again. So let them speak, but profit from their stupidity. They've been making stupid choices recently, now we're going to make profit out of those choices. Okay? It is the timing to go ahead. Not the timing to put fully leveraged position in here, but it is about time to really look at the market and say, they've gone too far. And now the risk is viable enough to start betting against that, okay? Betting against the denials, guys. I think right now, those who will keep on denying will be wrong, and they will take wrong decisions, and I want to be on the opposite side to take their money, because I've been limiting the risk enough, okay? So not the time to switch. Don't listen to those guys. They will try to fight it again like they always done. And they think this will work until they've lost too much money to think to prove them they're wrong. So this is it. This is what probably the next parts will be. I'm not saying that this is obviously what is going to come, but this is what the most probable scenario is to me. So this is what I have my mindset projected to, and this is what my portfolio is oriented toward. This is just like it. I'm no magician. I'm not telling you that I know the truth. I don't come from the future. All I say and all I do here is trying to explain why and how I do take my trades. Okay? Creating a mindset, waiting for technical confirmations, searching for a context. So clearly context is that market has high probability to collapse, and some of those markets have a probability to collapse in a bubble crashing phase, which is the one I would like to profit from, because this is where the biggest gains will be. So moving on, this was for stock market bubble kind of thing, but you probably already know about that. So gold we're talking about, US soil we've been talking about as well. 10-year yields, they're rising again. I mean, they're thinking that we're going to pull back, but this is not going to be the case. We clearly have a breakup, and we have targets up here, so we're probably going to reach out to those. And we've got a second target as a fucking weekly breakout, which is 4.18. So this is where we go if Wall Street decide to buy the dip. Okay, buy the dip situation, still an option. So as long as there is a viability to invalidate the scenario, there still needs to be a risk management. which means if it goes wrong, you're not going to lose more than 5 to 10%. And I'm not going to risk more than that on shorting Wall Street kind of scenario. If it goes wrong, I'm going to leave 10% to the market. Probably it's going to be the case. But the risk worth the reward. If I'm right, I'm probably going to double. So this is how it goes. I'm risking 10% to get 100 in return. So yes, obviously this is something I take. I could be right, I could be wrong. Fuck it, you know what I think about that. Those who see the market that way are those who are the biggest losers, and I don't give a shit about them. So they can criticize what I do. I know they're just not making money, and no problem with that. So if they want to keep criticizing, just let them do. So US 10 years, probably problematic ahead. First resistance area is in here, so I think we might try to get there. And if for some reasons we don't find resistance in here, we can collapse and get to 4%. 10-year yields, I remain heavily bullish on those ones, no matter what. I think we're heading toward resistances for technical perspectives, for fundamental reasons. QE is winding down, and as it is, I think we have no reasons to remain there for long enough. We have the bullish structure, 5 bullish impulses, but this is a leading diagonal structure. We've been correcting 2 waves. I think we're mature enough to go for some more bullishness at that point. Both economic perspectives in here, both fundamental reasons leads the yields in the euro area to rise, and I think the minimum is to just reach out to the 0.80, which is really a minimum, and I think we're more likely heading toward higher than 1%, heading eventually to 1.6 in the next few months and years. Forex, euro dollar, we're going to have a look at this one. Okay, so weekly perspective as we're closing that week, so we're going to see what it looks like. As you can see, yes, euro dollar might be showing some strength, but we made a bullish close this week, but we do remain breaking previous week's low and not breaking previous week's high, so it's still a little bit too early to go fully on dollar bearish. Probably is going to be next week's big case, but right now we still have odds. It's been 2 lower shadows weeks in a row, so there's obviously stop losses to set below this one as we make a bullish candle close. Okay, so what we repeat is that daily taking profit pattern is showing some signs of strength, but it's too early to go fully in, as to me stop losses must remain there. Okay, so in the euro dollar, if you're going leverage already, problem is prices are there, stop loss set must be set there, and you must not risk more than 2.5%, which means leveraging right now in the euro dollar isn't possible for technical reasons, because it's too expensive to hold for leverage. So you just want to wait for that market to either make a bullish breakout and confirm, or we're just going to retrace deeply. I think, to me, euro dollar is not mature enough. I think what we're about to do is making this, and eventually this afterwards. So we've got decent odds that this can be a bottom, but in a weekly chart perspective, nothing says that we cannot go further below. Slightly below, not that big. We can just make a range in here. We can just make an ABC flat correction. It's a possibility. All I know is that, to me, that consolidation wave is a little bit dangerous. We might be terminating it already, which means I've already taken reinforcements. I'm maximum leverage. I'm leverage 1, but I don't move ahead. I'm not putting additional leverage in here. So let me just switch to 3 on 5 on that one. So I've been taking reinforcement yesterday. So I'm going 3 on 5. Okay, so a maximum speculative leverage. I have strong confidence, but not enough to go leveraged. So remains low leverage and not losing more than 2.5% in that perspective. It will be out of money management if you were doing this. GBP/USD. Okay, I think this one remains bullish. I see no reasons for us to stop rising. Yes, we're probably terminating a bullish impulse, and you know how that market is about to react. We wait for 2 bullish impulses, but I think the first one would like to try breaking or reaching out for 38.2% retracement. So I see reasons to attract the price slightly higher. So probably here, 38% retracement or this extension of 100%. I don't know. I think this is probably viable for the 38. Then probably a pullback is going to occur, and then this is where I'd like to take some money off the table. So this is where I'd like to take my first gain on that market. So until we reach out to that area, I remain bullish. I'm maximum leverage, but maximum speculative leverage. I'm not going leveraged already. This is the part where we'll do it. When we'll pull back, this is where I pile up positions. This is where I go fully leveraged to the upside. So for now, waiting for further informations on GBP. EURJPY, interesting trade. We're ranging as expected. I think we've found a resistance. So we're kind of digesting things in here, but I expect this market to fucking collapse. Just the way I think euro dollar, for those who are thinking this is bullish, we might expect some more bearishness in the euro at some point. So it's to be seen. Not necessarily the euro dollar will fall apart, because dollar will fall as well. I think dollar will fall, euro will fall, and yen will rise, which will cause the euro yen to fucking collapse. So I think this one remains interesting, but I've just been spreading the risk between euro yen and USD yen. Okay, so as for now, I am 50-50 on those two. I do have euro yen and USD yen fully equally exposed, which means back then I was leveraged on euro yen and low leverage on USD yen. Now I'm 50-50. I've been rebalancing those things. So it's simply a shift into money management portfolio kind of trade, but I'm still same exposition. I haven't been loading additional amounts in the forex market recently, just changed and readjusted a few things. All right. NZD and I remain bearish. We're going to build a range in here, probably retracing no more than 38, or we could just slightly enter the dumb area in here, and probably what I wait for is for us to enter there, and then I'll get to trade the breakdowns. So I'm just waiting for that range to build up before we make the breakdown. Can take 1 to 2 weeks. We have catalyst next week's ahead, so we'll see how it goes. I'm just waiting for the market to trigger that trade. Whenever it will, I will obviously be there to take some huge cash in that market. I'm also taking CAD yen instead of trading USD CAD. So as you knew, I had scenario ongoing or trying to be playing in the USD CAD. I'm canceling this thing and I've been putting the money instead into trading CAD yen. So it's adding some yen perspective in here. So I'm waiting for that market to either go there, build a range, and then I'll try to break down of that range. But first we need to validate and find the bottom in that area, or I'm taking any retracement offered. So if the price is going there, CAD yen is going to be added to the portfolio. USD CHF, I'm not trading this one. USD CNH, I'm still trading this one, trying to figure out what the next step is. I think this one is obviously bearish. So we've got double bearish signal out of the taking profit. So I'm already in that market, so I'm not going to put additional money just out of the taking profit pattern. But it's taking profit with exit, which means this one's great. In here it was double taking profits, wasn't enough to trade. Taking profit plus momentum exit seems great enough, but I'm not yet ready to put additional amount of money in USD CNH. But it's possible. Okay, so I think what's going to come next is a collapse in here, or at least a market drop. But I'm just waiting for the risk possibility for us to go there. So if we go there, I'm ready to double down and add some money to that market. But I'm fearing that this might just be another fucking trap on that market. So I'm just waiting. If it collapses, I'm good. I mean, I already have bearish money in that trade. It's just the question is, do you want to add some money here? To me, that answer is still no at that point. We'll see what today's candle close look like. If today's candle close closes at the low, obviously I'll be ready to put some additional money. But right now I need confirmations out of yesterday's big bearish signal. USD MXN, I remain bearish on this one, no questions asked. I've been adding reinforcements yesterday. I've been telling you about that live. I've been taking that trade out of a double bearish we got there. Just wait. All right, double bearish. So I've been reinforcing. Trade is doing pretty damn well. And AUDNZD is failing to break down. So we're back to the support area. Once again, same fucking trend line. And we're just piling the things in between. I think we're waiting for NZD to break down. So it's just a matter of time. We need additional time in that range. But no matter, I mean, patience in here is really, really needed, because at the moment we're going to break this one up, it's going to be a trending market for probably 1 year. So we're going to trending for 1 year on that market probably afterwards. Not necessarily 1 year, but let's say at least 2 or 3 quarters. We're going to be pure trending to the upside. So lots of gains to expect. So you can definitely worth the patience in here. If you're not the patient type guy, then really just let it go, lower the leverage, and be really cautious on this one, because I wouldn't necessarily be surprised of an invalidation. Okay, so invalidation will just mean putting some money off the table, but anyway, I will remain bullish on any AUDNZD. I can just take some money off the table, but it will just be temporary to put double the amount at better prices. So if we go retracing, I'll just see that as an incredible opportunity. But I think right now it's obvious to everyone that this thing is just building up for a nice trend. So I think nobody's ready, and people are just buying in anytime we reached out to that support. So I'm just waiting. As you can see, volume is piling up on the support. I don't think this is the kind of trade that triggers a breakdown. But I think this is definitely the kind of trades that is loading up the car before just getting full speed. So this is it for forex market. We're going to have a look at the market in a Fengit perspective. So this is Fengit index: Facebook, Netflix, Amazon, Google, Apple, Tesla, and Amazon. So this is the big guys, and as you can see, crashing pattern is triggering in here, no problem with that. You can clearly see parabolic scheme, volatility and rise in volume, then lower volatility as we head toward the market tops. So lower volume, so volume is dropping when we do make the historical highs, and then volume is pulling again as we reach out and the prices are failing. So prices are rounding, topping, not breaking new resistances, and volume is rising. When you see this, when you break supports, you know the crash is down the road, and I want to fucking profit from it. This is the most profitable kind of market you can ever find, crashing a market that has been creating bubble. So obviously I'm in those trades. I've been taking reinforcements on all the big assets, the Boeings, the Apple, the Nvidia, all of those. I've been adding some shares on those. Tiny amounts as I've been spreading the risk. To be clear on this, it's basically a leverage one. So you know I'm trading with 50Ks. At that stage of the year, I'm already 75Ks in the bankroll. So I've been taking that amount of money. So I'm leverage one. I've been putting approximately 70K all across the board. In Tesla, no more Tesla. I no longer have Tesla. But Apple, Facebook is too late. I don't have this one. But Google, I think I've been. Let me remind you. I just don't even know when I press the button. Yes, Google. I'm on this one. Nvidia as well. Netflix is still late. Amazon, I'm in this one. Twitter is still late. Boeing, I've been taking as well. So all those assets, I did spread 70K all across those assets. Okay, so I'm not just taking a risk on a single asset. I've been taking risk on multiple assets. Okay, but I'm not leveraged in here, which means if we drop 30%, I'm going to take a 30% gain, no more than that. I expect the market to do this, and I expect this gain in return, but I don't want to risk more than that. Okay, I'm risking approximately 5% on those assets because the stop losses are set above the market tops. And if I do get to lose those 5%, that's part of the game. I would pretty much like the market to don't do that, but if it does, that's how the game plays. You try to speculate on crashing markets. You've got nice reward for the risk, but there is still a risk to be proven wrong. So if you do put leverage at that stage, it's really dangerous, because what I have in front of me is not suggesting that we're mature enough to go leverage. All I can see right here is that we're working the first support area. It's dangerous, and I think the market will just range that price area for a bit before triggering the moment where I will be putting leverage. So I'm in because we broke a support, and that's part of the plan. So if you follow the plan, this is where you get into trading the Fengits to bearish. Okay, this is where you switch to bearish. Okay, so this is where you get to trade sell. So it's a breakout selling entry. Okay, because you cannot trade before that. It's too aggressive to go bearish in here. So you do trigger when the breakout occurs. This is what we've been doing today. So when everybody tells you that this is just a buy the dip, no, it's no buy the dip. It's really, we've been triggering a potential crash pattern, and if it is, we're gonna keep on going that way. So it's just the beginning. If it is how it is. I mean, for the bubble trades, the indices that are not trading like bubbles, and I remind you, this is important. If you trade the SPX thinking it will collapse, you're probably wrong, because this one doesn't have a collapsing like kind of structure. But those fangets clearly does have an overbought pattern and a crashing kind like of price structure. So ranging in here for a few days before going down, we're going to break the 200-day, and we're probably going to have to report the range to the downside. So you take ranging in here, bearish, breaking down supports, and then dead cat bounce. So don't forget the profit taking area nearby. It really is important. The way you see this is where the profit taking should be made. Take those lows. Okay, you can start winding down in here. Doesn't necessarily mean that you have to take it all out. But right in here is the area you want to start rebuying your selling entries. Okay, you start getting out of the market at that stage. Don't forget the profit taking. It's going to be V-bottom. It's not going to last long. And those who will sell their shares at that stage will be stupid, because they will sell long-term supports. Okay, there is still support in that market. We're not going to go straight line to nothing. It's going to be waves, and this is linked to psychology. This is linked to psychology. Remember the crashing pattern. It's all about that. When the market will panic, you want to buy the fucking panic. So if you want to buy those shares, buy them here. I'm not going to be one of the buyers. I'm just going to take the selling entries just like I've done with the Bitcoins. Taking the nice short entries in here, waiting for the stupid guys to buy the high pricings after the dead cat bounce, selling the fucking dead cat bounce, and heading into crashing patterns. And finally, we're going to talk about Apple, which is pretty much saying the exact same. So Apple's been reinforced the other day, and I expect this share to just try to range that price area, try to survive for a bit. As you can see, we're on the previous trend line, so obviously the market will try to recover from it, and this is when we'll fail and break down that you can go leveraged on Apple, but not until then. Until then, there's still high risk for the market to just go there and create another fucking bubble. So you don't want to be one of those who will go leveraged in here and be fucked up if the market decides to go up. There is still risks for this. There's still risk for this to happen. If this had to come up, you don't want to be among the losers. Remember that. In order to take every gain, you need to take risk. What makes the difference between a good trader and a bad trader is that the good trader is going to manage those risks. The bad trader is just going to do it bullshit kind of God trading, which is the worst case scenario, because your income will be related to your luck. So when you're lucky, you're going to make great money. When you're unlucky, you're going to lose it all, and it's going to be bad, because this is not how life works. You need stability. Every human needs that stability. So if trading is expected to be your job, then there is no way you can do gut trading as a job. This is not how it goes. This is how gamblers do trade. This is how gamblers all terminate the same. They collapse because they will take some stupid decision someday with leverage, and they're just going to die. So this is not what you want to do. If you want a long-term perspective, long-term job, do it the long-term way. It takes some time to get to the psychology of being compatible with trading, but it's definitely worth the time. So take that time. Don't rush. Build your self-confidence, self and rational confidence, not overconfidence, kind of stupid stuff. Don't be bold in market. All the bold people doesn't work well into trading. They can work pretty well in the first stages, but they all die in time. So the only guys who survived in trading all have the same psychology. We're all rational persons, smart persons. We think we are cold-blooded because it is not because we don't feel emotions. We're fucking humans. I said, if you're thinking that this controlling your emotions or removing your emotions is the solution, you're just wrong. Living with emotions is what makes you a living human being. You're not going to cut this out. It's not going to happen. It's just you need to avoid negative, extreme emotions. But it goes from avoiding the extreme positive emotions as well. You don't want to be euphoric. You don't want to be panicking at any time in the market. And only experience is working this out. So leave yourself enough patience and make yourself in the way that you can survive long enough to get that experience and become eventually someday a professional trader. So this is an advice that you already know about, but I cannot stress this one enough, as so many people wants this to work fast and easy, and that's the worst way to just think about it. Invest on yourself, okay? It's gonna take time, but it's worth the shot for those who will manage to make it till the end. So that being said, I'm gonna leave you guys on that. Just take a few questions you might have said. Yes, the website is an SSL error because I just recovered the usual URL. So now Pro Indicators is back in the game. Fuck it. Yes, it's proindicators.com. All right, so proindicators.com is just working as fine as it was back then. So I've just recovered and switched back to the previous URL. The other one, Pro Indicator, is still mine, but the thing is that as I cannot have two SSL encryptions on a DNS redirection, for now it isn't working, but I'm going to find a way to set things up. I'm going to see with the webmaster. This is way too complicated to me. I understand the process, but it still remains a little bit too complex to me. So yes, this is, don't worry about that. This is already taken care of. And I already answered this one. So yes, obviously I brought the SPX and NDX yesterday. It's just that I made that on a specific video that I've been giving you the link to. So it's trying to break 6K for a long time and lingering just over it. What do you think it will not break? I just don't fucking give a shit. We can break it. All I think is that right now the pattern I'm trading is rise in volatility. So if that rise in volatility allows us to break 6K, I'm just not going to take the bearish trade. It's just simple as that. I was ready to take that trade earlier. I think right now the conditions are not met to take that bearish trade. So if it breaks 6K, then it breaks 6K, and I will just do nothing. I mean, the thing you just don't get in here is just that trading is nothing static. It's something that is already in motion. The thing is that you need to adjust when the action is necessary. You just don't need to be a flipper. You don't want to be changing your scenarios each and every time, because if you're a switcher, you're just going to be in the wrong case, in the wrong possible way. I mean, you need to have a mindset. All I say is that consider trading the market like a box, okay? Take this. This is what the strategy is acting like, okay? I'm going to terminate on this today, okay? So take this, okay? Take a box. This is what your strategy looks like. It's a visual thing, okay? So this is what the market may do, okay? Consider the market is this, something that can be pretty fucking irrational, okay? All we fucking care about is for us to have the dots more and to have as more dots as we can inside that box. The bigger the box is, obviously the lower the reward will be. We mean low risk scenarios, low risk trader will have a box like this, okay? A very large stop loss, so it will be rare when the market will take their stop loss. But when the stop loss comes, it is big, really big stop loss, okay? But this is you deciding what kind of box you want to use. More aggressive traders like me, we do this, which means we'll still have those dots, more of the dots. In here, but we got far more dots getting out the box. The question is, if you get stop lossed every time a spike is going out the box, there is going to be problems. So the way that I do see things as a professional is that you must not see this as a static thing. Meaning, if we go there, you take a stop loss. Because if you do this, you're not going to be really profitable. What's going to make you more profitable being a highly skilled, highly level speculator is this. It's the fact that at some point you're going to say, okay, you know what, that dot is crossing the border, but I'm not triggering the stop loss yet. Okay, and it's by removing those dots, okay, those tiny dots, that you're gonna get even better and multiply the gains you'll make as a speculator. Okay, trend traders, they don't give a shit. They will be right probably 80-85% of the time, but the 50% of the time they'll be wrong is gonna flush out many gains in a single trade. So the problem is they will make low long-term income. It's easy trading. It's not stressful. but it's low rewarding. Okay, so it's only viable if you have some decent capital income that you can use for trading. And as I said, and I really stand on this, if you have more than 200,000, you really should consider not taking too much risk and getting into some trend trading. Not stressful, you're going to be making 15 to 45% a year, which is more than enough. But if you need to make more, you're going to need to require using either leverage, which is not possible, or risk. This is what I'm here to teach you guys, to take risks, but to manage them the best possible way to make sure you're not taking stupid risk, which is unnecessary, okay? So consider this, your strategy is a box. If you don't accept those spikes, you're just going to be all wrong. Losing is part of trading. No matter what, it's not going to change. It's not who's going to decide what the market will do. And obviously the market will prove you wrong at some point. It's just that you need to manage the trades that are in between, that are just at the borders. Of course, when the trade goes all wrong, you really need to cut this one out. But when you're reaching in here, when you're reaching the boundaries of that box, is where you're going to see a good trader and a bad trader. This is really where the decisions are making the difference between a trader that is going to make 40% a year and a trader is going to make 100% a year. Because the trader is going to make 100% a year is the trader that will manage those dots in here and do it well. The trader that will just make 40 is the one that will just stop loss every time the market crosses the border. It really is that way, okay? What makes me a good trader is the fact that I have some experience already right now, that I've seen so many cases. But you don't have that experience, so you just don't want to play that game. I'm just here to tell you about real experience because I'm sharing my experience with you guys, but you're clearly not in the same mindset as I do. You don't have the experience I have, so you just don't want to copy me in here, okay? But when I do that market adjustment, this is what makes the big difference, okay? This is what doubles the gains. Not necessarily doubles, but this is what increases the gains. Okay, so when you see me adjusting things, I don't want you to do that. I explain you how I do it for educational purposes because I want full transparency. I don't want to hide from you. When I'm doing something, I explain you what I do, why I do it, even though most of those adjustments shouldn't be made by you guys. Okay? So really see it that way. Okay? When you see things adjusting, it really is that way. And to me, we're still right in here. It's just in order to maintain the strategy viable when it comes to Bitcoin, I strongly think that the Bitcoin right now breaking 6K remains in the strategy. So it's not a spike that's going outward the strategy. I'm accepting this because the risk management I've been taking for that trade is good enough to accept that. It's a buy and hold, which means, as I said, this thing can go to fucking zero. I'm ready to lose it. I'm ready. It's going to be losing 5% capital. But what is? I mean, really worth the shot. I'm expecting 400% gain. So losing 5% here, definitely worth the shot. So, okay, if it shows up to be that case, then here it is, and here it will be. But I hope you really get the point when it goes there. All you need to know is just that when you take a trade, you need to have your strategy and your risk management taking and surrounding most of the probabilities the market can go to. Of course, there are still tiny probabilities that the market can go otherwise and spiking out the box, but you need to make sure the box is sized decently, okay? And as there is too many uncertainties regarding Bitcoins, too many ways to spike out of an aggressive box, I'm not using the aggressive kind of trading. I'm using the buy and hold. So it's a really big box, the biggest box ever, because the stop is just one dot, the one that leads that market to zero a year from now, okay? Despite that dot, that trade will remain in as long as it's needed, okay? So, that being said, I'm going to leave you guys on that. I hope you learned quite some things today. I'm going to put this one as an educational content because I've been giving you some interesting tips today, and I want you guys to be aware of this one. So, goodbye. Wish you a good weekend, and we'll see each other again on Monday.